Keith, first person in. Hey, Tawny, welcome. Yeah, I'd like to get into that. They call that, I think, market neutral or delta neutral strategy, something like that. It's a portfolio method. Okay, going live on TikTok. Okay, the TikTok is live now. I'm sure Elliot's going to be the first one in. Nope, he's not. There's a bunch of other people. Hello, everybody. What's up? What's up? Welcome to the party. Welcome to the party. Faraz, such a busy day. I just got home and saw it was time for class. It has been, man. Same here. Very busy day. What's up, everybody? Hello. All right, I've got the market pulled up here. This is the S&P 500, which is SPY, which is the S&P 500 representation of the entire market without breaking it down into sector. But we will break it down into sector in just a moment here. Yes. All right. So today was really an amazing day on the market, especially at the end there. Broke all-time highs for sure, and created this bottoming tail candle, which says, "Hey, we're going to be flying from here." So that's very interesting. But if we just flip really quickly to QQQ or XLK, they're exactly the same. Take a look at it. That's tech. That's now saying, hey, instead of just the entire market, let's specifically look at tech. So tech is still in bad shape and in a downtrend. Let me grab the pen here. All right. So downtrend is defined by lower lows and lower highs. So here's a lower high. Here's a first low. Here's a lower low. And at the moment, today in tech did not even make it over this lower high. I mean, that's just bad. That's a downtrend. I mean, it's just going to keep going until something changes. So tech is getting highly rotated out of. And so then the question becomes, wait a minute. So if everyone's selling off tech, and when we go to the market itself in general is making a new high and putting in higher highs and higher lows. So it's in a perfect uptrend. And the full market represents a total of about 12 sectors. And tech is going down and doing very poorly. Then what the hell am I betting them on wrong, right? Like, because everyone's in tech. And where is it going up? Well, if you take a look at industrials, you can see that is extremely leading the way. And that's Boeing, GE, Caterpillar, Deere, those kinds of companies, Raytheon, right? The industrials. And that has something to do with the fact that we've got inflation going on. There's the 10-year yield rate on the same exact chart. That is the rate of interest rates. Just a couple months ago, interest rates were at 0.5% approximately, 0.5%. Now they're at 1.6%. That's more than a 300% increase in rates in just a couple of months. So this is what caused the tech sell-off, was the fact that the Fed was not too concerned about this, and yet it was glaring you right in the face that inflation is in fact here. And so the reason why that is because tech is highly levered. Like, for instance, Netflix is in 47% debt. So that's a ton of debt. But if you go over to Facebook, Facebook is in 7% debt. And what does that mean? Why does debt matter? And that's because when rates go up and they need to get more money so that they can continue to grow like they have been by using debt to grow themselves, like Netflix has been, they're at 47% debt. It's going to cost them now 300% more going forward. And next year, even more. And the year after that, even more. So in other words, and for the next 40 years, it's going to be going up. And so the future of these tech companies as growth companies is highly suspicious now, especially if they have high debt, but not Facebook and not Google. Google has like 3% debt. Facebook has like 7% debt. Those are not in peril, but Apple has 32% debt. So how are you going to pay off that debt? How are you going to start to pay off that debt so that it doesn't become worse and so that the payments on it and the more debt that you need doesn't become burdensome? You've got to take that money from somewhere. Where is it going to come from? It's going to come from laying off employees. So what is that going to do? That's going to shut down R&D in some, departments. So what's that going to do? It's essentially where the company's going to slow down. These companies are going to have to be slowed down, cut back, trimmed, so that they can start to make their debt payments moving forward. And this may not be right away, but look at Tesla. The PE ratio on Tesla is like 700 or something. In other words, you're valuing it 700 months into the future. It's like decades into the future. The price you're paying now for it is how much you think it'll be worth over that much time. Like if you had the goose that laid the golden egg, you wouldn't just sell that to somebody for the price of one golden egg. You sell the whole goose that lays the golden egg for the price of how long that goose is going to be alive. And so that price is way higher, right? So now they're figuring that the goose that lays the golden egg is going to be worth a lot less because it takes 37% or 47% debt in order for it to lay that golden egg. And over the next, 10, 20, 30, 40 years, that's going to cause all those profit margins to be under a lot of duress and stress. So on the one hand, you have rising rates. And then on the other hand, you have tech companies in a lot of debt. So then where's another place that you could benefit investing in if companies that are highly in debt or debt in the future is going to cost more? Wouldn't it be that wouldn't the creditors, the people who are loaning the money, be some of the best bets you can make in the business? Yes. Those who are cash rich and have zero debt, those are now the king. Those are now the kings and queens of the system. So that's banks and lending companies and credit and mortgage companies, those kinds of places. So you have things like BDCs, which are small to medium-sized business lenders. So you have like GBDC or the ETF BISD, and they're doing outstanding in these times because now as inflation goes up, they're going to be able to make more money off of the money that they're lending. And in fact, many BDCs, those are business development companies, many of those companies are lending loans that they got, but they're smart in that they get their loans at fixed rates, very low rates for like 30, 40, 50, 70, 100 years. So they just freaking scooped it up. I mean, they just scooped it up at 0.5%, right? Now rates are going up. And when they lend out their money to these small businesses and medium-sized businesses, they lend it at a variable rate. So the businesses then get a rate that just keeps floating higher and higher and higher. What a business development company does is you hire them to consult on your company and turn around the company that's not doing so good. You give them funding, and then in return, they give you big payments on their loans. And so these business development companies are some of the best bets moving forward right now. And they even offer yields of about 10%. So on top of capital appreciation, so for instance, it went from 11 to 17 lately in the last like 3 or 4 months. So that's a 17 divided by 11, that's a 54% gain. So on top of your money gaining 54%, they give about a 10% dividend, and some of them monthly. You don't get 10% monthly, but you get a 10% annual rate in monthly payments. So BIZD is the name of the ETF on that. I recommend, instead of distressed companies like Apple and Netflix and highly levered companies who are going to be struggling moving forward, you go and you move your money into the lenders, the actual creditors. So, the banks and these business development companies like this ETF, BIZD, and mortgage lenders, and the ones that have good charts. Make sure you look at the charts and get into something good. But most of the BCDs are doing great. Other things that do well in inflation, well, as far as good investments, are commodities. So the prices of everything are going to go up. That includes energy. So oil, gas, all those are going to go up. And there's even talk about the Democrats really, really pushing raising minimum wage from $7.50 or 25 cents, whatever that is, to about 15. So almost a double. So that's going to cause a doubling in inflation. All prices across the board at the bottom of base prices are going to double. That includes aluminum, that includes base metals, base materials, but it also includes corn, rice, sugar, soybean, all these, everything, all things that are commodities are on a real tear right now. If we go to like agricultural ETF, DBA, look at that. Quite the tear. It's gone also straight up. So moving forward, inflationary plays are going to be where you're going to want to start grabbing money. And this also includes money. So that also includes Bitcoin, and that includes foreign currencies. And when inflation occurs in the US, that causes the dollar itself to deflate, because inflation is the inflation of the expansion of the monetary supply, and that causes a deflation in the value of the dollar. So what does that do relative to the dollar for other countries? It means that their money is starting to get worth more for the amount of money that it takes for you to buy it. In other words, for the exchange rate, right? So that's a foreign currency, or Forex, foreign exchange rates. So, and gold, yes, gold, silver, everything will be going up that's a commodity or foreign currencies. You basically are betting now against the US dollar. So you got to start to watch out, because you could make some real good money if you played, like, for instance, Deere. That's an industrial. They make tractors. Why would tractors be doing so well in an inflationary era? Because farmers are going to have so much more money, because the prices of all their products are going up. If you go to the grocery store and go check out, apples and the prices of those things, they're going through the roof. They're really getting expensive. Avocados, you name it. So farmers are raking it in right now, because people are going to need to pay those high prices. And what do you think? When they need a new tractor, it's going to be so much easier to afford the new one with all the doodads and everything they need and the upgrades, and give me that other thing, the thing that does it. So these tractor companies are now going to flourish, and industrials across the board are going to flourish, because that's what happens in inflationary times. So you'll see that from GE. You'll see that from Caterpillar, another tractor maker, essentially. And you'll see it from Boeing. And all these companies are going to start to just whoosh, like they're going to be the big plays. So whereas before you were going after Apple for these incredible gains, Apple's really going to probably go sideways for really years. It may go up, but it's going to be slow money. Apple may go up over time. It's going to be slow, choppy money going forward. And it's going to have some rough times too, because they are going to have to cut back to pay those debts down. And there's going to be the rising rate problems. So, but then you go over to, Caterpillar or DE, and you go, man, why didn't I put my money in that? Like, wow. Right. So just imagine for like 3 days, you can day trade these things for 3 days. You could swing trade them for a week, for whatever it is. That's where you're going to get your consistent, fantastic, powerful returns now. So that's a little bit of a lesson on how you can make money moving forward better than you have before. And he who adapts fastest wins. So if you're going to be the guy that's made Apple all the way, man, Apple all the way, dude, that's been for 6 months. It's been doing fucking nothing. Like that ship is having a problem moving forward. So I'm really trying to get you to be successful here. Like you need to drop your little mental baggage, whatever it is, your little, thing that you want to, like, you love that one particular company. It's, not gonna be where the money is at. And aren't you really interested in making money? Maybe if you have a ton of money and you just want to like give it to Apple and you don't give a crap and you don't even care about making the money, you just want to like support a great company. Hey, great for you. But I think most of us want to make money. And right now it's going to be in the industrials. So that's what's going on in the markets right now. You can't, we go over to QQQ and tech is in a downtrend. And you go over to XLI, industrials, and industrials are on a tear. And you go across the general market market's doing just fine. It doesn't care about Apple. It doesn't care about Tesla. Those companies are too highly levered. And if you want to bet on tech, you bet on Facebook. You bet on Google because they have like nearly zero debt. Over the next 2 years, that's going to be a real powerful thing. That's going to allow them to use their cash reserves to buy these other companies that are going to be floundering, or lend them money, or invest in the companies that are going to lend them money. This hand moving over here to this hand. And Google and Facebook poised to really, really win over the next few years over all the other tech companies. And Microsoft is pretty highly levered too. We have a list somewhere, as a matter of fact. Is this it? No, we had a list somewhere and I posted it in the group of what tech companies are too highly levered, and which tech companies are outstandingly in cash and they have almost no debt. All right, so let's go to questions now. Faraz, Boeing, industrials. You guys are having little side conversations. Okay, we'll definitely talk about NFTs in a minute. Microsoft. Microsoft is in 27% debt. The Discord, I don't know what the latest rate is. Click on the link in my bio. First of all, it's free to join our Discord. And then from there, click on through to check out the prices. What does the debt percentage mean exactly? Like percent of its worth that's debt? Yeah, the particular figure that I go by is debt to asset ratio. So assets would be like, let's think about like Norwegian cruise lines, right? What are its assets? Like, give you a second to take a guess and you can just type it in. What are Norwegian cruise lines assets? Right. The boats, the boats. And then there's other little things. And then, your accountants can figure out what's a different asset or not. Maybe they have contracts for ports, and those themselves, they could sell to other, companies. And that's an asset because it has a financial, you could make money on it. So, those are your assets. So that's the value of a company. Its bankruptcy value is basically the liquidation value of its assets, which is also known as tangible book value. And right now, if I were to go over to Norwegian, the tangible book value of Norwegian is currently $54. So it's actually undervalued. In other words, the liquidated asset value of the company is $54 a share. However, the company is in 65% debt. I mean, we know that it's like really tapping the debt in order to stay afloat right now. And I can see on my chart, it's increasing. Before this problem, they were in 42% debt, which is still pretty bad. But they're in 65% debt and probably rising rates on top of that. So they're in real trouble, real trouble. And yet, though, they do have $54 a share worth of assets they can sell off in case they need to get out of trouble. They can always sell off a boat or two to one of the cruise lines, which is not in debt. Those cruise lines can gobble up the other cruise lines at a discount so that those other cruise lines can pay off their debt and become solvent again because maybe they can't make their debt payments. So are you starting to understand now about what that means? stay afloat. Funny. Yeah. So that's what that means. 65% in debt to their assets. So that's a bad place to be. That's really high. You want to keep it under about 33%, 1/3, 35% max. Apple is 32%, but in a rising interest rate environment, that's a scary place to be. So Microsoft, again, is at 27%. So a bit more healthy than Apple, but not super great. The single digit debts, those are going to be great. So Facebook's at 7%, I believe. Let's see. Facebook 7%, yes, and Google is 9%. So those are good. Those are like, wow, that's a lot of that's so easy. They can easily pay off that debt with the revenues. They're not even going to have to cut employees. They're not going to have to cut back anything. They're just going to they probably have cash stockpiles. In fact, they do. And they can just take those cash stockpiles and pay off that debt if it's a problem moving forward. All right, any other questions about all that? Where are you checking the debt asset ratio? There's many places you can check that. I happen to be checking that on TradingView. Check out SFT. They sell used car for long investment. Yeah, you were telling me that today. What about them? What is this big thing you keep telling me about this fucking used car salesman shit? No, thank you. I don't know. Maybe they're really revolutionary, but all right. Okay. You know what? For you, just because you're Sergio, I will take a look at this shit ass company. Okay. Yep. It's a shit ass company, just like I thought. See how it's going down and down and down to the ground? Yep. Crap. Okay. Let's move over to, wait, let me double check the TikTok if we have any questions. Dad jokes. I didn't say that. I said keeps afloat. Somebody else mentioned that, and he's a dad too, I think. And I am a dad. If some other countries did similar quantitative easing, yes, that is true. So that's, that's part of global macro. You're going to have to get into that on your own and study. You've opened up a Pandora's box of difficult analysis. Good luck with that. And then Prima says, Kathy Woods is saying the opposite. Can you comment on that? Just look at the fucking chart. You know what I mean? Like Kathy Woods is obviously not reading what do they say? Reading the writing on the wall. I think there might be a bit of denial there. But in time, anyway, Kathy Woods is an amazing gal, and she's a really good trader, an excellent trader, just the best out there. And I'm sure when something underperforms enough, she'll cut back on it. And when something else is looking like it's performing, she'll put more into it. But she's behind the 8 ball. So frankly, that's my analysis of Kathy Woods. She's behind the 8 ball on that, unfortunately. All you got to do is take a look at ARKX and see that it's not doing very well. It's in a downtrend. Couldn't even get over the recent pivot high low, the lower high. It's not good, not great. So she needs to rotate. She needs to rebalance. She needs to watch out for this debt problem, this inflation problem, the fact that industrials and financials are getting hotter. I really don't like how she's allocated ARKF. It's also kind of like heavily into just flat technology instead of innovative lending. That would be interesting. So yeah, she's not pushing all of her bets onto the credit side of things as inflationary era starts to ramp up. Yeah, she just does. She's just not looking at rates. All right, let's see, where are we at in the program here? 24 minutes in. All right, so let's start take a look at, let's take a look at Bitcoin. I know it's down around 52,000 or something. Let's see. 54,000, it looks like, if my prices are correct. Sometimes futures can be off. Is everybody seeing 54,000 in their systems? You're welcome, Prima. Lupo. Anyway, Bitcoin looks like it's still in an uptrend to me. You can't just go up every day. So these things have to pull back a little bit. Like the last time it pulled back, don't you wish you bought at 45,000? Anybody here wish they bought at 45,000 like 2 weeks ago? Pretty much everybody. So that's what's going on now. Let it. It's probably 2 or 3 more days and a little baseline around 50,000, maybe 51,000. Buy more. You are going to wish you had. And I already have members telling me and showing me the fact that they've got their stimulus checks. So the Treasury's already giving them out, and we already know that at least 1% of all the money that is going towards stimulus checks ends up in Bitcoin, in crypto in general. And so we know that the crypto markets are going to go up between $4 and $16 billion based on an estimate. And the way that money trickles down from the stock market, and then somebody wins it, and then they bring it over to Bitcoin, they put it in that. So it's going to trickle down and on over to crypto, and then also have direct influx into crypto. And that's money coming in like a river, like water filling a tank. So the prices are going to go up. They're going to go up on Bitcoin and Ethereum are the like leading assets. So you want to be grabbing these pullbacks and putting your money in these pullbacks before this thing rips past 61 again and goes to 70. Comes down a little bit, rips past 70 and goes to 80. Comes down a little bit, rips past 80 and goes to 90. Comes down a little bit, rips past 90 and hits 100. And that's where we're going to be at like my goal is 100. So I'll be selling, like 80% of my position around 100 thou, or just under, maybe 94,000, something like that. What's up? India is planning to ban Bitcoin. Residents have 6 months to liquidate their money as of news 12 hours ago. That's why there's this many sell-offs. Oh, interesting. And yet I think that's great. Like that's going to cause a drop. We'll be able to get in at lower prices soon. And it's a decentralized monetary asset. So you can ban it, but that's the whole fucking point, right? All you got to do is get an anonymous wallet, and okay, so now you're banned, but you still have your Bitcoin. I don't think that's going to affect that whole like India region's not going to like go, okay, 100% of all India is now out of Bitcoin. Don't think so. But yeah, I mean, let's get this pullback. Hell, that'd be great. Create panic. Excellent. Yes, let's do it. A panic drop. Let's have it. And Joanna says it hasn't been passed yet. It's just a proposed law. Perfect. Because that's not going to be passed. That'd be like ignoring that's a Blockbuster move. That's a Blockbuster Toys R Us move. It's like the future is changing. And then we're like, yeah, no, we don't think so. Yeah, okay. You think India is really going to be that dumb? Friggin' Indians are really smart people. I think they're especially the ones who are probably in the economics area over there and leading the country in finance and economics. Oh man, they're not going to make that mistake. What they might do is they might create a new crypto for their country, perhaps. Also, what we had today is what was it? OCG. So NFTs, what is it? Non-fungible assets, whatever they're called. Somebody write it out for me. I forgot what it was. Brain fart. Non-fungible tangibles or something. Non-fungible tokens. There you go. It was something I wouldn't have known. Anyway, today that started to come up, and so we got in right away. Somebody brought it to my attention. Hey, we're seeing some pretty strong movement, and the volume was really big on OCG. I looked at the daily chart right here, just like this, but it wasn't that high. You have to rewind the day and imagine this was like right around here. And I said, by God, this is on a real tear. It's reversed several red candles, and it's going to come up over the top. And if it can make it over the top of this candle, the sky is the limit. So you know, basically I got all in on that, and a bunch of us in the group got all in on that. We had members saying, thank you ever so much for 78% gains today. Hell yes. That was really incredible. And we're still in it. But in after hours, it has pulled back to 7.7. But we'll see where it goes. I mean, in my opinion, this is something that's going to go up and break 25.8. How is, you know, NFTs less hot now than it was when this spike happened here? I don't think so. So I think we're going to see this one go to 40, 50, 60 in the next couple of days. NFTs are hot. And I think if you're not in it now, like, boy, this is one of those ones that's moving really quick. Yeah, $69 million JPEG. Exactly. Oh, that's what that spike was? No, I don't think so. I don't think, but today probably. Yeah, exactly. Now it's happening. And then, yeah, Penn is doing good too. But the other non-tangible are, what was it? TCAC, I think. TCAC. What is it? TCAC, I think. TCAC. No, what is it? It's I alerted it. Let me grab it from my alerts. TCAT. There we go. Thank you, guys. TCAT's another NFT play. I got in that as well today. And whew, boom. And then also SYV, SYR, SVR, something SVY. Well, anyway, it's right here. YVR. Jesus, I was way the frick off. And there we go again. So those are all the NFT plays right now. Well, there's a few more even, but YVR, TCAT, TKAT, and OCG. And then Camille asks, oh, I love it when these people ask this, is OCG still okay to get into? I don't fucking know, but like, it sure was a hell of a lot better to get in low. I love when you guys ask me, you know, ask that of anybody. Like, the thing has gone like up through the stratosphere, and is it still good to get in now when it's high? I like to buy high. That's my philosophy. Dude, like, trade at your own risk, man. You may have missed the boat. Yeah, you may have missed the boat on it. But what you could do is you could put in a little bit. If it seems to keep going, add on. If it keeps going, add on. And then so you could approach it that way. But it's hard to get into something if it's already taken off. One thing you have to remember is that it's not the last goddamn thing that's ever going to go up on the planet Earth. So you can always get into something next week that's going to do the same. Right now, it's non-fungible tokens, you know, and Bitcoin's on the out for a few days, right? So, yeah. Well, you know, a lot of people didn't. I don't know what to tell you there. Check your settings about that. I was also live talking about it. So we were all over it today. That's the difference between if you can be there every minute of the day. You know, day traders are going to be on top of these little, you know, these moments. We got in real early. We got in at like 10 a.m. on OCG at $5 at $5. We got in at $5 and it hit almost $10. We almost doubled our money. Yeah, instead of buying. All right, well, yeah. What stock were you speaking of before OCG? What were we talking about? Bitcoin before that. But then I was talking about TCAT, TKAT, and now I forgot the name. YVR is the other one. So there's three. You can watch them, Camille. You can watch those three, you know, tomorrow. See if they pull back. Maybe they pull back, then get in. Something like that. What about that? That sounds good, right? I worry about the fact that you will get in at a high. You know, it's tough to chase these things like that because you get in at the top and then you're the guy who bought GME at 515, you know, and then it hits 70. I don't want that to happen to you, you know? So that's why I'm being pretty frank about it. I'm not, you know, trying to help you, not trying to be mean. What's the white indicator that I'm using? The white indicator. I think you're probably talking about these lines that it draws. If you click the link in my bio or go to Linktree/chart trader, then it's the one on my list called amazing indicators, and it's in there. Yeah, Kawane is saying that. Oh, Kawane. Yeah, I'm going to teach that tomorrow. We won't teach that right here because it's a little bit advanced. But Kawane, I got you, man. We'll do that tomorrow. Kawane, and as a matter of fact, can you make sure that you, even though you're at work, just maybe find a moment to just message me on the Discord and remind me, private message, and say, hey, I'm not going to be there, but can you go over the trick to avoid pattern day trading rule? And I will for the VIP members. Every day, something goes up huge. Don't invest in what was huge yesterday. Today is a new day. That's right, John. Yeah, I mean, like the trick to this is getting in low. Like the lower you get into things, like if that can be your philosophy, the better you do. You know? So that just means you got to pay attention a little bit more to, things that are going around. I mean, being in this group is wonderful because, for instance, OCG was brought to us this morning. So somebody, I forget who, deserves a big credit on that, brought it to us. And yeah, I just instantly recognized it as that's going to fucking pop. I didn't even need to know what was going on. Somebody said OCG. I didn't know it was about NFTs. I didn't know nothing. I look at this chart, it's at $5. It's right here at that time. And I go, holy crap, this is going to go to the moon. You get good at reading charts. So that was pretty cool, man. All right, so we did really good trading those. Pollo Loco's like this guy. Hey, Rob, there you are, man. Rob is actually a really good friend of mine. How you doing, Rob? Let's see, India. Can you get those indicators in the membership? Not that one with the white, but my one that has the green and the red lines above it. So if we were to go to the daily chart here. So like that, being able to fill that in. Yeah, if you get the VIP membership, once you become a full paying member after your trial, then yeah, you may have that. But it is also for sale. Like if you didn't want to become a member, here's my link tree over there on the YouTube. You guys are asking good questions, man. Here's my link tree. You'll find a lot of cool goodies there. So that's Linktree/chart trader for anyone who didn't get that link. Or gosh, I don't know if anybody's in the Zoom doesn't have that yet. There you go. Hey, Evan, how does Bitcoin correlate with Riot, Mara, and SOS? I mean, it lags, but it correlates, So that's what I see. Like if we go to the 3-month on SOS, we can see that SOS is responding to new movement in Bitcoin. It is not like a full movement, but I do believe that Bitcoin going up is going to cause SOS to go up. And that's why it's down in after hours, because Bitcoin went down. So in any event, stimulus checks are going to go into Bitcoin and Ethereum in predominantly as far as the crypto market, or eventually it's going to get there. And by June, but probably May, maybe even sooner, some late April, we will see Bitcoin likely pop 100K. And so that's why I am, like 2 to 5 months long on Mara, Riot, SOS, Bitcoin, and Ethereum. Oh yeah, I'm absolutely holding my SOS. I'll probably double down if it gets down to like 6 or 5. I can't pull up the XRP chart right here, but I can tell you, I'll take a look at it over here. Last time I looked at it, I wasn't too impressed. Yeah, it doesn't look too good. Not too good looking of a chart. Doesn't show a lot of promise. So I'm not in XRP just because I read charts and it doesn't look good. So that's basically where I'm at with XRP. So I may be wrong, but I may be right. That's about all we can say about that, right? You can check out your due diligence as well. Microsoft. Okay. All right. Thoughts on AI? Really good question. So like Palantir and AIQ and the ETF AIQ and AI stocks. Like I've said, AI for sure, like all the innovative stocks in tech are going to do super well during inflationary times because they're going to increase productivity without extra cost, maybe even at a cheaper rate. Those kinds of companies are going to be the ones where you're going to want to if you're business to business, you're going to want to make your contracts with those companies, not the other ones, because you got to beat these inflationary rates, right? So I think AI is certainly going to be a company, a sector, an industry that's going to do well in tech moving forward in about 10 years, 5 to 10 years. But right now, I think there's way too much R&D cost going on, and that those companies are not going to be able to turn a profit. They're not going to be able to come up with practical application that turns a profit, in any kind of meaningful growth way for 5 years. So my short-term outlook on Palantir is bearish, and that's for years. However, I do love it. I think it's great. I just would much rather buy it at 25% of current value, which I think is basically where it's going for the next few years. Let's take a look at the chart. So it's bearish. It got hyped up in the beginning. There's been little hype spikes and things that have turned around, but it's at 27. I'll get in at like 7. I'm going to wait for it to hit like $5 or $7 in the next later this year. What was that? Okay, Billy Joel. What did I say? Did I say something about Piano Man? That's probably a good analysis. What do you think, guys, about AI? I mean, that's what I see. I mean, and the charts are showing that. Let's go over to AIQ, which is an AI artificial intelligence ETF. Yeah, it's also not doing super great. You could say that it's kind of rising very slowly because the way I check the growth of companies is not by their upper lines, but by their rising lower rate. And that's real slow progress right there. So, we'll see how that plays out. I don't think AI is a very good play in the short term, but it definitely is in the long term. Thanks, Faraz. I may be wrong, but I may be right. That's the way it goes, man. And you learn how to manage your position. So like if it goes right, you let it ride. And if it goes wrong, you cut the fucker. And you go put that money on something that goes right. And if you're wrong, you cut the fucker. And you just keep doing that till you're right. I don't really need to be right. All I got to do is not be wrong. So anyway, erase. All right, what else should we take a look at here? Rob, XRP is dog shit, says Rob. Thank you very much. You can see it in the chart. Buying lotto calls for SOS. I don't recommend lotto calls. Yeah, I don't think that's a good idea. I'm an advocate of in the money calls. And then you said at 75 Delta by mid-June. Oh, there you go. June 7 calls. Buying lotto calls for SOS or 6-7 calls at 0.7 Mike Delta in June. Good strategy. You mean you're going to buy both? You're going to buy both lottos and 0.75 deltas? I guess. I guess maybe you're going to see that that's just a compromise, probably, and that you would have made more money if you had put that lotto money on the 75 delta. Yeah, Faraz says just buy more 75 delta. He knew what I was going to say. All right, Exxon Mobil had a dip today. Looks steady though. Yeah, if you look at the like when you're trying to analyze one of these stocks, also blow out to the sector and check the sector it's in. So let's see. We look at Exxon Mobil, right? And it's running like that. Let me get rid of some of this chart here. Space on the right. Okay. That's a 3-month chart, I think. Let me get the 1 year. There we go. Okay, so Exxon Mobil's been on a tear. Energy's been on a tear. Energy goes up in accordance with the inflation and the way commodities price up. And in inflationary times, energy goes up. Exxon Mobil going up. But now look at the energy sector. exactly the same chart. I mean, Exxon Mobil is the number one weighted, or maybe it's Chevron, but those top two are in the top two rankings of the XLE energy sector. But yeah, so you can see that. So you can say, okay, Exxon had a bad day, right? So you can look at it and go, oh man, Exxon sucks. If you looked at it today, you'd be like, no way am I getting into that. Exxon sucks. It went down all day. But what you're not paying attention to is that may just be like a 3-day pullback that we're going through right now, and that it's time to get in a couple of days when it does pull back, because it's going to really take off more. However, the fair valuation of oil is about $65, and that's where we're at right now. Experts say, I can't value oil, but experts say that the fair valuation of oil right now is about $65 moving forward per barrel. By the way, does anyone know how many gallons of gasoline you can get from a barrel of oil? You have 3 seconds to give me the answer without looking it up. 20. 15, May says, yeah, 20. Frost is like 90. Maybe I'll get right. 20. When you refine a gallon of oil, you get 20 gallons of gas out of it. So if it's $68 and you divide that by 20 and you add some taxes, that's $3.40 a gallon plus taxes. So right now, and it takes about 3 weeks to 6 weeks for them to deploy and do all the refining and get the gasoline for your gas stations for you to put in your cars. It takes about 3 weeks to 6 weeks for them to go through that process from that oil price that you see there. So gas at the bottom, depending on what state you're in, at the bottom, it can be much higher because of your state's taxes and import fees, et cetera. It's going to be $3.40 plus tax per gallon in about 3 to 6 weeks. So get ready. It's going to be an expensive summer. I'm Persian. I should know this. I was talking about unleaded gas, like gasoline from oil, from a barrel of oil. 20.03 on the VIX. Damn, I was so close. Let me take a look at the VIX. I said if the VIX can close below 20 and stay there, obviously, because obviously it's not good. If we can stay below 20, I will pop a bottle of champagne on air, but I forgot to buy one. I actually told my wife I got to get one on the way back home. 20.03, saved by the bell. All right, tomorrow, hopefully, we'll see the market go up a little more, and we'll see the VIX close below 20. I don't think so, but fingers crossed. And a bottle of champagne awaits very soon. On air, we're going to pop that and we're going to drink it. And hopefully you guys will all be with me with something. Maybe we'll even turn on the gallery view and we can all turn on all our cameras and we can cheers together. That'll be fun. We'll have a moment. Terribly mad I didn't hold Cat 215 calls. Yeah, man. I mean, kind of like, didn't I tell you? You know what I mean? Like, holy cow. It's now at 2:30. Yeah. I mean, you have to think of these companies like Cat and Deere and GE, et cetera, and the way the sector rotation has happened. These are the new Apple. These are the new Tesla. Like when you used to just fucking love the way Tesla just ripped for like 6 months, that's over with those companies. That's over here now. So like, he who adapts fastest wins. And that's what it's all about, man. Like, get over it and get into where we can make some money. And like, you got to like, just drop all that mental, the Tesla, the Apple is like, dude, no one gives a shit anymore with money. There you go. Boeing, Case, Cat, Deere. Yeah. When I sold engineering software in the 90s. Yeah, there you go. And they're going to do great again. Do I have long-time holds? So those are good, super long-term holds would be GE and the BDCs. So I already explained that earlier. Look it up. They're called business development companies. Those are excellent bets for the next 3 to 6 months. Like if you want to see your money appreciate and give you a 10% dividend, BDCs. And there's an ETF which will get you into 29 BDCs and gives like a 9% royalty dividend, which will likely go up again as these companies give out higher yields as they have their earnings releases. You'll see BISD giving closer to a 10% royalty. Also, convertible bonds are a good bet right now, and preferred shares. But these are things you can get ETFs on. I think preferred is like PRF, something like that. Find an ETF that gives preferred shares. These are great places to park your money right now because those are like guaranteed money returns on your investment. You don't have to worry about the difficulty of picking difficult stocks. Rob, how you doing, buddy? I mix oil and water, yes. All right, well, let's see. At this time, let's go and check out what might be hot tomorrow. Let's see what popped in the after hours trading by checking out the Market Chameleon. So I'm looking at that right now. Rob's like, with what? The Market Chameleon? We can have iguanas on the show? Let's see. ANCN actually did really well again today. And I think it didn't do well during market hours. We didn't get any trades out of that, did we? Or maybe we made a fortune on it. I don't remember. Every day is a new stock. ANCN. No, it popped in after hours quite big. Look at that. Woo! It was at basically 4 all day, 4.5. And then after hours, it went all the way. It doubled. It more than doubled. Went up to almost 10. And settled down at about 35% retracement. So that's very bullish. It held above WAP. That's that dotted blue line right there. And we had pushes with pullbacks that broke those highs and kept pushing. So this is a really good sign. And it's totally natural for it to peter out as volume petered out towards the end of after hours. But tomorrow in pre-market, you're going to see that really pop. And what is the news on that? Let's see. News is... there's an approved merger going on. So it may steady out right there once it gets its fair valuation. NTN, I heard about that popping in after hours after I took a break and went to the park with my kids today. NTN was at 3.7, popped all the way up to 7.5, basically doubled, 100% gains. Retraced a little bit more than 50%, but then got back above WAP again. And put in a couple of nice bullish runs before the close of the after hours market. So that's really good. Well, we've moved on from there, and I think we may have looked at Boeing earlier. I'll do a real quick Boeing analysis for you guys because that is kind of hot right now. So Boeing popped up and fell all day. That's usually the sign of 3 days of, it's almost like when the groundhog comes out and sees his shadow, it's 3 days of red. So usually when a stock is on a run, a super duper run, and then it gaps up and then it goes red all day, that's usually a sign. You can usually actually get puts on it. It's a very good predictor, like an 80% probability that for the next 2 days, 2.5 days, by the third morning, to get out, you should be able to see it pull back a little bit. 3 days of red. Well, right now, say no to Boeing, but yeah. We made a lot of money on Boeing, I think a couple times this week. They're probably here and here. Yeah. Yesterday and the day before. We did really good on that. All right. Another one that popped in after hours, up 48%, is ENZ on 6.5 million shares traded. Let's look at the 1 minute chart on that puppy. Oh yeah, that looks really good. It closed basically at 3 and hit almost 5, retraced and held at VWAP, which is good. Retraced only about 25%. So that's very bullish. It's about 75% bullish if you consider that with the 25% pullback. That's how this works. iSun, that's another one with only 500,000 shares traded in after hours. Maybe it popped late. And that looks also very good. This is the kind of shapes we like to see. Now down and around only 25%, and after hours is FICV, FICV. And it says, I can't find that. Maybe I misread it. FTVC. FTCV. I feel like, why do I feel like Biden right now? No, that's too low on volume. So that doesn't look good. It probably will do well, but it's just too low on volume. Your bid ask spread is going to tear you apart. So don't trade that. All right, you guys, everybody on TikTok, everybody on YouTube, make sure you click the links in my bio in the description. Get on through to our free Discord, join, check out my links, follow, subscribe, like. I'll see you in the morning and for another great day. I think, what are we, like 20 days of gains in a row right now? We're on a real run. All right, let's do it again in the morning. Good night, Rob Fulton. Nice to see you, buddy, and I'll catch up with you right now on Messenger. Have a good night, all.